what now? Jonathan M. invested 100,000 in Bitcoin. Speaking of Bitcoin, let's see. I have a picture here. I think it was 99,000. I saw up like 1,500. You probably, here it is. 99,268. I just took this picture a minute ago, so it's the current price up 1,378. I know it hit like 103,000 on the Bitcoin. You can think of the Bitcoin like a world currency, you know. I think it's a good way to diversify, have a little Bitcoin, diversify from stocks, but it's very volatile in price. What I would do, I would just put a plan to sell at a profit. So like if you got in here 99K, maybe plan to sell it at 110K, so 10% return. So when it hits 110K, it probably will this year because Trump's about to talk about it, probably bump at least 10%, maybe 20%. And when that happens, I would sell. And then it'll probably dip down back to 100, back to 90, whatever. Then buy, right? 10% down, sell 10% up. You can look at the movement of Bitcoin. It moves like 5,000 up, down. You guys want to trade that? So I would trade it if I was going to invest in Bitcoin. I would trade it. That's what I would do. Because it's hot for a couple weeks of the whole year, then it's like boring for a whole year, I think. Welcome, you guys. Appreciate you. But I specialize in stocks, so I'm not the crypto guy. So if you want a crypto expert, that's not me. And you guys also give me 2 shares each. Bottom right corner, click share. Send it to 2 people. Appreciate you. Get some people in here. Help this algorithm. Do I keep putting in or just wait or sit on it, Jonathan? On the Bitcoin, yeah, you can keep on putting it in. I think it's a good investment as any. It's probably better than gold and silver coins because Bitcoin's going up right now. And with the Trump administration, they're going to make a big government investment. So probably it's worth a good 10, 20% pop and then sell. But like anything else, you want to support your investment over time. Like a lot of times what people do who are broke, they have no investments, they have no savings, they don't put nothing they spend all their money. And then what? Then when they retire, they got to work at Walmart or McDonald's. So you don't want to talk about Bitcoin. Do put money aside every check you get, every time you get money, tax returns, refinance, paychecks. Always put something in your investments, whether it's stocks or Bitcoin. Be consistent. Even if it's a small amount, $50, $100, whatever you can put. Because over time, that's going to grow. And you're not really going to miss the $100 or the $50. But that invested in something that's growing over time will give you a nice little nest egg. 5 years, 10 years, 20 years. So that's what I would do. Keep on building it up. What does father spell? What stocks would you recommend? Jonathan M. Jonathan's asking all the questions today. All right, Jonathan, what stocks do you recommend? Write down some symbols. Dividend stocks, MCD, McDonald's, Pepsi, PEP. Let me pull up this account. Pull up some stocks for you guys. Appreciate your questions. I'll give you a few dividend stocks and a few long-term share growth stocks. You want to have both dividend stocks and long-term share growth stocks. Why? Because you want to get the best of both worlds. Research. Okay, MCD, McDonald's dividend stock. DIV for dividend. You may not be that crazy about McDonald's, but it's an overall good investment because there's so many profitable food chains around the world, and people eat mostly for convenience. And they have a few things that we good at. The oatmeal, which is good. They got the fillet of fish, they do have some a salad. It's not all bad. MCD. They got some nice coffee. They're improving. They got these pies, these holiday pies. I think the McRib is back. $2.98 per share. It was down 50 cents today. $2.98.90. Now that might sound like a lot to pay $300 for a share of McDonald's, but I'd rather you buy one share of McDonald's for $300 than 300 shares of your dog shit penny stock that's not going nowhere, that's not doing nothing. McDonald's, for your information, has gone up over 5 years. I'm looking at the 5-year chart. 5 years ago, 197. Has a nice little uptrend. Pull it up with me on your own end. And then today, $2.98, up $100, which is 1/3. 33% return in 5 years. Not bad. And to consider it's a dividend stock, let me tell you how much it pays. 2.36% dividend. 2.36% dividend. And a dividend like that's important because what? By the time you retire, you should have about at least $1 million in dividends. And 2.36% is $23,600 a year. And that's enough to supplement your Social Security. Buy some extra stuff. Increase your standard of living. Do you guys have a way to increase your standard of living? Have you done that yet? Dividend stocks. McDonald's. They had an E. coli breakout. Somebody was unalived last month. The stock dropped from $3.15 to $2.90. And everybody forgot about it. Stock's right back up. So it's like a buying opportunity when that happens. Go figure. All right. More about McDonald's. Volume, 4.2 million a day. Check. 5-year chart going up. Check. Robust share price, $300 a share. Check. PE. I want to show you the PE, which means they make profit. That's all I got to worry about. PE is 26. PE 26. Check. 1, 2, 3, 4. Did I say dividend? Check. And I'm going to say stock splits. It has stock splits. Check. That's everything. It's a steady grower. It's not going to double. It's not going to double in a short period of time. It's going to be mostly safe. People got to eat. It's more like a safe stock, low beta stock. It's on the Dow Jones. Can't really lose too much money in it. It's going to pretty much be good and going up. They're trying to improve their selection quality. Gotta give them some credit. McDonald's Corporation operates and franchises restaurants under McDonald's brand in the United States, and internationally it offers food and beverages including hamburgers, cheeseburgers, various chicken sandwiches, fries, shakes, desserts, sundaes, cookies, pies, and soft drinks, coffee, other beverages, and full of limited breakfast items as well, and sells various other products during limited one-time promotions. The company owns and operates under various structures comprising conventional franchise, development license, or affiliate. McDonald's Corporation was founded in 1940. Let's see what ChatGPT says. I just want to ask it a couple questions. I've been playing around with my ChatGPT. How many employees work for McDonald's around the world. Okay. Just give me 2 responses. 2 million employees. So to have 2 million employees, someone's got to be working, making some burgers or something. I just like to check the employees. It's not a criteria, but I think, it means something. 2 million. And Pepsi. I said Pepsi, right? Pepsi is symbol PEP. Also a dividend stock, PEP. So have some dividend stocks. Because why? Because you're getting money every quarter. On top of the share growth you're getting money, dividends. $157 a share. Value by 1 share of Pepsi, PEP. 157 down 270 today. Value by 1 share of Pepsi, then 157 shares of your dog shit penny stock that's going nowhere and doing nothing. It has a robust share price, check. It has volume, 8 million a day, check. Has a 5-year chart. Now, 5 years ago, Pepsi was 137, and now it's 157. So it gained 20 points. Not a huge gain, but it's a gain. 5-year chart, check. Has a PE. Let's look at the PE. 23, even a better PE than McDonald's. Check. And a dividend, 3.68%. Wait, no, that's not right. What's dividend? My Schwab is bugging out. What is the dividend for Pepsi? Okay, let's do this. Let's ask ChatGPT. What is the dividend for Pepsi? Let's see. As of December 6, 2024, Pepsi ticker PEP has declared a quarterly dividend of $1.36 per share. Annualized is $5.44 per share. So you're getting $5.44 per share, which is approximately 3.45% return. 3.45% return dividend, which is dividend check. So it has everything also like McDonald's, and a higher dividend than McDonald's, so that's good. So out of $1 million, if you're getting 3.45 dividend, that's $34,000 a year. You can supplement your Social Security income. Improve your standard of living. Some of you guys are complaining that Social Security doesn't pay enough, so you better grab onto some dividends. Dividends are good because you don't got to do any trading. You don't got to do any worry about stock market fluctuations. Just hold the shares, get the dividend. I would say fall out of bed, get the dividend. And the income is like a paycheck. When people hold shares like Meta and Amazon and Google, there's really no dividends to speak of. So they have to sell shares in their retirement to get money. Eventually, if you use this strategy about selling shares to pay your bills, you'll have eventually no shares. So a dividend stock is great because you don't got to sell your shares. You get to pay the money. It's like icing on the cake. It's like you're getting paid money on top of your shares. If you want to sell your shares, you can. But since you get the dividend, you don't have to. That's your paycheck. So McDonald's and Pepsi, I like. Questions? Sorry, was that too much? Would you buy VT? Kev Kevno, would you buy VT? Well, I'll look it up for you. Don't be upset if I tell you it's trash. Vanguard. Is this a mutual fund? Total World ETF. So here's the thing about mutual funds and ETFs. Vanguard. There's a Vanguard building in New York, and there's a big ass sign on the side of the building, glows at night. Inside the building, there's floors of traders and brokers, and they have computers, and they come in, they have ties, they drive nice cars. My point is all this, and they got payroll. So all that takes some money. So when you do an ETF and mutual fund, consider that you have a middleman that's taking a pay cut. That's taking their cut. They're not going to manage your money for free. So what's happening is you got professionals managing money, pensions, and investment portfolios. And they're, doing all kinds of crazy trading. They're doing cover calls, they're getting dividends, they're trading. And they're giving you just a small return for what they're really making. So don't think that you can see an ETF or a Vanguard mutual fund and think that they're giving you all the return they're making. They're not. They got to pay for their Bentley. They got to pay their payroll, the sign on the wall. So what I do, I teach you guys how to make your own mutual fund, to make your own trading. Cut out the middleman, learn to do it yourself. That way, you don't got to pay, you don't got to worry about someone taking a pay cut from your stocks. However, on the whole, mutual funds are good for people that don't know what they're doing. You can start with a mutual fund. But then when you start learning how to buy your own stocks and trading and doing cover calls and dealing with options, then you can start seeing if you can do it yourself and how well you do. Makes sense? If you follow me, I'll show you how to pick your own stocks, what's good. Like right now, Pepsi and McDonald's are good. They have great dividends. And they're good long term. They got share growth, plus they got dividends. They're on, McDonald's is on the Dow Jones. Speaking of Dow Jones, ChatGPT. What are the Dow Jones 30 stocks? This is stuff that it knows. Stuff that you can research, but it saves you the time.
The Dow Jones Industrial Average, DJIA, commonly known as the Dow, is a stock market index that tracks 30 prominent publicly traded companies in the United States. As of December 6, 2024, the DJIA comprises the following companies: 3M Co., MMM, American Express Co., AXP, Amgen Incorporated, AMGN, Apple Incorporated, AAPL, Boeing Co., BA, Caterpillar Incorporated, CAT, Chevron Corp., CVX, Cisco Systems Incorporated, CSCO, the Coca-Cola Co., KO, the Walt Disney Co., DIS, Dow Incorporated, Dow, Goldman Sachs Group Incorporated, GS, Home Depot Incorporated, HD, Honeywell International Incorporated, HON, International Business
IBM.
Machines Corp., IBM, Intel Corp., INTC, Johnson & Johnson, J&J, JP Morgan Chase & Co., JPM, McDonald's Corp., MCD, Merck & Co., Incorporated, MRK, Microsoft Corp., MSFT, Nike Incorporated, NKE, Procter & Gamble Co., PG, The Travelers Companies Incorporated, TRV, United Health Group Incorporated, UNH, Salesforce Incorporated, CRM, Verizon Communications Incorporated, VZ, Visa Incorporated, V, Walgreens Boots Alliance Incorporated, WBA, Walmart Incorporated, WMT. Please note that the composition of
Walmart also has like 2 million employees. Side note. So those are the Dow Jones stocks. I think Intel actually got kicked off. Was it Dell? double check. Sometimes ChatGPT will give you errors because they're not like up to date, but it gives you good general answers. So the point of the Dow Jones is like it's a top brass. These are big, fat conglomerate companies that have either a service or a product that goes out to like 150 countries, some of them. So it's like they have like the too big to fail strategy going on. McDonald's, Coca-Cola, stuff that's really everywhere. Nike, Visa, like who doesn't use Visa? Walmart. So if you want to be safe, if you want to be less risky, and you want to put long-term money, look at some of these Dow Jones stocks because they're safer in the sense that more people are invested. They got more volume. They're not some small no-name company that can go broke. These are tried and true 10-year, 20-year, 30-year, 40-year companies. Coca-Cola is a 100-year company on the stock market. Apple's on here now, AAPL. So that became a top brass. You want to do a bank, Goldman Sachs, GS. Okay. Now, user 367818 asks, JEPI, is JEPI paying almost 7% dividend? Is that a good dividend stock? Let's look it up. JEPI, JEPI. JP Morgan Equity Premium. Again, it's JP Morgan. So they're trading, they're doing trading in various instruments, and they're taking their cut and they're giving you a small return. But let's see the dividend. I might have to ask my ChatGPT. Dividend is 7%, 6.98%. So on $1 million, you're going to be getting $70,000 a year. Not bad. But look at this. 5 years ago, it has a 5-year chart. It was 51. Now it's 59. So actually, it has maintained. So whatever they're doing, they know what they're doing. They're maintaining the share price, and they're also getting a dividend. So I can't complain about it. I mean, obviously, it's decent. It's paying more than McDonald's and Pepsi, but it's not going to have the share growth. Remember I said McDonald's went up 30% in 5 years? This one went up almost 20% in 5 years, so it's okay. I'll give it the green light, JEPI, JEPI, but just know that when they're doing mutual funds or ETFs, JP Morgan, they're making money hand over fist. I'll show you a couple of trades tonight that it's just like you can't lose. And they can do all those trades also. They're doing special, but things that the normal folk don't know about. And stuff that rich people do. I want to talk about that, actually. Let me take another couple of questions, and I want to talk about something that some of you guys might not know about. Can you check VKTX? Awful Madden plays. VKTX. VKTX. Let me see if I can pull it up. VKTX. Viking Therapeutics. $50, not bad. Up 90 cents today, 50.80. See, that's a 5-year chart. Yes, that's a 5-year chart. It was $7, and now it's doing much better. So, VKTX. 5-year chart, check. Volume, 2.7 million, check. Robust share price, no. Dividend, I'm going to assume no. Let's see, dividend. PE, no. No dividend, no PE. They're losing money, so that's important. Market cap, $5 billion. Small market cap, no. I'm gonna have to say no, but let me check the cover call. Let me just see if they're making a cover call here. Click on options. So you can buy 100 shares for $5,000, $50 a share. And to do the cover call, you agree to sell it 1 month in my system, 1 month further out, and for a little bit higher on the share price. And for that, you're going to get a premium. And it is December 6th, so we're going to go to January 10th, 34 days. And if you buy the shares here at 50, which is $5,000 investment, it does have a cover call. You can sell the shares for 52. So you buy the shares here at 50, 80. That's $5,080, 100 shares. Write the cover call next month, January 10th, which is 30 days out. Every time you have to do 30 days out, ideally, every month you could do the cover call. And the 52 is paying $260 to $590. So it's a huge gap. I mean, it's a huge spread. But it says last is $439. So I'm going to go with that. $439. I ideally want more volume, but you can put a limit order. Because if you put a market order, you're going to get $260. But let's do the $260. Minimum cover call is $260. Calculator. Do the math with me. $260 premium per share, or $260 per 100 shares, divided by your investment of 5080. 5.11% return for the month for the cover call. So that part isn't bad. On these therapeutic stocks, you're looking for them to make a lot of money and shoot up in price. It's a $5 billion company, so it's very small. So there's risk. But on the cover call, if you did 10 cover calls a year, you're going to get 50% return, 51% return. And I can't complain about that. Not only that, but apparently someone did a cover call for $439. So that's way more. 4.39 divided by 50, 80 equals 8.64%. So I'll remind you guys to do limit orders to get more money. So the bid is what you sell it at. The ask is what you buy it at. Write that down. But if you want to get between the bid and the ask, you can put limit order. You can put limit $4 or something. And it might take in 30 minutes, or it might take a few days. But you're given a chance to get more money from your cover call. Or when you just buy a stock or sell a stock, you can put limit order, let's say, better than the bid or the ask, and you can possibly get filled and try it. Questions? What simple was that again? Fidelity Bitcoin ETF. Alex OBDC. Is that a stock? I'm just sensing like low quality, but let's not judge. OBDC. I told you what I like. I like McDonald's and Pepsi for dividend stocks. At least today. Blue Owl Cap. $15 a share. 1.9 million. So it has volume. 1.9 million. $15 a share. Not a robust share price. Let's look at Blue Owl Capital Corporation. Is a business development company. It specializes in direct and fund investments. The fund makes investments in senior secured direct lending or unsecured loans, subordinated loans. So it's kind of like a bank. They give out loans. Let me look at the 5-year chart. It was 17 5 years ago, and it kind of dwindled down, then it came back. So it's pretty much maintained. I give it the 5-year check mark. 5-year chart, robust share price, no. Volume, check. Does it have a PE? Probably not. Annual dividend, 11.2%. Whoa. That dividend I like. If you look at the 5-year chart, it kind of maintained. So I'm going to give it the dividend check mark. On this one, $1 million gives you 110K. Not bad. That would definitely supplement your Social Security. Symbol OBDC. Not bad. Let me look at the PE. Has a PE 9. Check mark. Has a market cap 5.9 billion. Tiny market cap. I give it to X. But 1, 2, 3, 4, 5. Out of 6 criteria, it has 1, 2. It has 4. I'm gonna give it the green light. Not bad. OBDC, 11% dividend. Now, before you buy that stock, see if the dividend has been consistent. Because sometimes what you'll find out is that the dividend gets cut or slashed. It's not consistent. If you look at stocks like PM, Philip Morris, and MO, Altria, I know these ones because I'm in them. They increase their dividend every year to beat inflation. So not only do they give you dividends consistently, not only do they not slash your dividends, they pay consistent dividends and increase the dividend to beat inflation. So this is something you want to look for. Not just that they pay a high dividend, in this case, OBDC does, but that they're going to pay a consistent dividend that doesn't get slashed, and ideally, that gives you more money every year, gives you a raise. Because when you're working, you want to get a raise, right? When you're in PM and Altria, MO, they give you a raise on your dividends. I won't say no. Okay, guys, I want to read something for you. Thanks for joining me. Appreciate you. Guys, give me some likes. Hit those likes. Hit those likes about 2,000 or 3,000. Appreciate you. Help me get some people in here. If you guys gift, throw me some coins. I won't say no. Throw me a crane or two. It's only $5 a month to sub. I take care of you guys. You subs know. You already know I take care of you. Been on the all day on Zoom with clients. You already know, and I'll show you how to do these trades. I can advise if you have questions. Ideally about stocks, but I'm here. How about PM? Bob the Gambler. How about PM? Yeah, well, PM is great. Let me pull it up for you. PM. Philip Morris International. Now PM, Philip Morris International, that's the world market for tobacco. So MO, Ultra, is the U.S. market, and PM is the world market. And the world market is still smoking a lot. Philip Morris International operates a tobacco company working to deliver a smoke-free future and involving portfolio for the long term to include products outside of the tobacco and nicotine sector. Company product portfolio primarily consists of cigarettes and smoke-free products, including heat not burn, vapor, and oral nicotine gum products primarily under the IQOS and NYZ brands. Consumer accessories such as lighters, matches. It offers wellness and healthcare products. Oh, why not? Philip Morris International was incorporated in 1987. So on the 5-year chart for Philip Morris, we have $85 5 years ago, and now it's $130. What kind of return is that? 85 divided by 130. 65% return in 5 years. So that's better than McDonald's even. And look at this dividend. Dividend 4.8%. No, 4.08. Sorry. 4%, close enough. So it's a better dividend than McDonald's and Pepsi. Has a better 5-year chart, better share growth. Has a volume 4.2 million. Has robust share price, check. Has volume 4.2 million, check. Has a 5-year chart that goes up, check. Has a great dividend, check. Has PE, check. 1, 2, 3, 4, 5. What else? What am I missing? The PE on Philip Morris is 21, so it has a fairly valued PE. Oh, the market cap. The market cap is 206 billion. They had this on the Dow Jones a while back. They took it off when they were doing the tobacco litigation, but they should have just kept it on because it's just a boss. So out of 6 criteria, they have all 6 check marks. So PM is great. What did I want to ask? Oh, ask ChatGPT. How many employees does PM Philip Morris have? PM stock? Should I say PM stock? Because I don't want to add Altria to it. Stock. Because they're really the same company, but there's 2 sides.
As of December 31st, 2023, Philip Morris International, PMI, employed approximately 82,700 individuals worldwide. PMI this represents a 3.63% increase from the 79,800 employees reported at the end of...
Okay, so they have a lot of employees, 82,000. Like, if you look at business as a perspective, like as a whole, if you look at the S&P 500 companies, so you people that are asking about what to do, what to invest in, how to start, stick with stocks on the Dow Jones or the S&P 500 because they're the top brass. They have a lot of requirements to be on those lists. And if you look at the S&P 500, which is the top 500 companies for the U.S., off the NASDAQ and off the New York Stock Exchange, collectively, it represents 25 million employees. So that's a lot of damn jobs. It's like the backbone of American economy. So that's meaningful in the way that the S&P 500 companies is hooked to everything. And the reason they're flourishing is because they're working. There's employees working in those companies, providing a service or a product, and they're selling that. The company's selling that for money, for profit. So they're out there working and making money. That's why all this is it's a very successful model. Now, without further ado, appreciate you guys. Hit those likes up. I think we need some more likes up there. Tap the screen, pat. I want to read you guys an article that I wrote on Quora. And then we're going to talk about a couple of positions, and we're going to wrap. Okay, I won't keep it too long tonight. Let's see. So that's what you can use ChatGPT for, to find out like random stuff that save you time to researching. I paid $20 a month extra, but you don't need to pay the money. It's just, it gives me like a little extra layer. Okay. Let's see. So, I saw this article. How do the rich and ultra rich get away with paying no taxes? I just had to jump in because I think a lot of people don't know what the rich really do and why they're different and how they operate. And I just wrote a little article about it. Let me see if I can get it to play. Now, this is not really about stocks, but you can do the same thing that you're doing on this article in the stock market. That's what I was trying to tell you.
Mentor, stock market trader.
Let's see if we can do this. Here we go.
In a general sense, yes.
Take notes.
The rich can pay less tax or even no tax.
Record this.
If you don't know how this works, let me show you how. The rich and ultra-rich have the financial intelligence the average folk do not. The first way I know about they can access tax-free money is through government bonds. Number 1, municipal bonds, for example, munis, offer around 3.5% interest per year. Tax-free. And I know a guy who was living off of 2 million muni bonds earning about $70,000 per year tax-free income. And don't think about the fact that you need $2 million to have that. This guy was born with it. While the average person has to work hard for that $70K and pay tax on it, the ultra-rich have it handed right to them tax-free. The ultra-rich are financially set to be tax-free and sometimes have it like that from birth. Number 2, next up, borrowing from life insurance. I know another guy who has $1 million universal life insurance
Take
policy.
notes.
He makes monthly payments. Don't think about having to make monthly payments. He lives off of interest-free bonds which pay all his monthly and yearly bills, $70K per year. Many rich people already have life insurance anyways, many from a very young age. So this rich guy needed money and so he just borrows $200K from his life insurance just like that. No credit check, no hassles. The policy was only 5 years old. And get this, he said he can take up to 80% from the policy if he wanted to after so many years paying into it. And what else? Yup. It's tax-free income. Consider grabbing a hold of $200,000 tax-free. But I believe he did say they charge 5% interest on the borrowed amount. However, guess what? He explained that the 5% interest they charge is offset by the policy going up in value over time, so the interest is negligible. I know, right? Can we say loophole? He can take that $200K from life insurance and do whatever he wants with it, start a business, go to Las Vegas, or even just use it to increase his standard of living. Can it get better? Yup. That borrowed amount, you don't even have to pay it back. It just reduces the face value of the policy, whatever isn't paid back. And 1 million isn't even a big policy, it's really not. Some people have $5 million or even $10 million policies just lying around. Just multiply 200K tax-free withdrawal by 5 times or by 10 times. Think of getting $2 million handed to you if you want tax-free. Better. It's the stuff of the rich. You people who have big policies, you already know how this works. You people who don't know, find out. Number 3, next up, borrowing money from real estate. Many rich people own real estate. And guess what? They can just take a loan off their own real estate. Let's say he borrows $300K, $300,000 from $1 million house. And guess what? Yup. It's tax-free. Meet Mr. Rich Man. He's a regular guy, probably looks something like this, see above. There is a certain air about him. Like he doesn't even care. He can use that $300K to do whatever he wants with it: Vegas, start a business, or just increase his standard of living. Did I mention the money is tax-free? Yup. But how is he gonna pay that $300K mortgage loan? Rent out his property for rental income paying off the loan. He's probably living in Beverly Hills somewhere. But wait. Did he just incur some rental, taxable, income? No. Not necessarily. He offsets his rental income by property depreciation, making his rental income tax-free. That's next up. Number 4, welcome to property depreciation. If you own a property, you can credit yourself with the yearly depreciation of said property by the way of 100% depreciation of the property every 27.5 years, residential, commercial is 39 years. That means if your property value is $1 million, $1 million, and not counting the land value, just counting the value of the physical structure, which is typically 2/3 RDS of the total property value. 1,000,000/27.5 equals $36,363 tax-free credit you can use against your income to get your income tax-free. And if you are showing $50,000 income per year, for example, you can easily find some expenses to get that $50K down to $36K, painting, plumbing, management company expense, advertising, business consultant, etc. Making your rental income totally tax-free. Yup. Did you know? Can we say major loophole? So, to recap, somewhere out there is a guy who again, is living off $2 million in Muni Bonds, $70K income per year, probably given to him at birth. He has $1 million life insurance policy. He can easily scoop $200K, $200,000 out of it whenever he wants. He has a house. He can easily get another $300K from his property that's valued at $1 million. And pay for the real estate loan by renting the house to different clients, getting his mortgage loan paid, and with extra income every month to boot. But wait. Did he just incur some taxable income? Oops. Does he have to pay taxes now? Not really. Welcome to the fourth method of rich tax-free living. It's called property depreciation. You gotta love this stuff. He counts his property depreciation to reduce his taxable income, making his income tax-free. Just call it a major loophole. And this is all scalable, right? So while the rich man has 2 million in munis, earning 70K tax-free per year, his ultra-rich superior in financials has some 20 million in munis, times 10, earning some $700,000 per year tax-free income. Had that since birth, yup. Let's continue. This ultra-rich mogul has a life insurance policy, universal life, 10 million value. He can easily scoop out $2 million from his policy after only 5 years or so tax-free money. No credit check. No hassles. To do whatever he wants. Las Vegas, put it into a business, or just increase his standard of living. But wait. They charge him interest on his life insurance loan. Not to worry. That interest on his life insurance loan is offset by the increasing value of his life insurance policy, which goes up in value by the same amount or even more each year, making that interest negligible. Loophole. And he doesn't even have to pay back the life insurance. Whatever he doesn't pay back simply reduces the face value of the policy. Can it get better? Yup. Mr. Ultra Rich has a residential property, 10 million value. He takes a loan out on it for $3 million, $3 million. Now he has $3 more million to do with whatever he wants tax-free, Vegas, business dealings, increased standard of living. He pays his mortgage loan by renting the property out to different people who live there. It's probably in Bel Air by this point. But does that give him taxable income now? Nope. He offsets the taxable income by the depreciation of the structure of the property, making that rental income tax-free income. Now this ultra-rich guy looks just a little more well-to-do, more suave, more relaxed. He has an air about him that says, "I really don't give a fuck." He looks something like this. See above. He had it like that since birth. How do the rich and ultra-rich get away with paying no tax? Paying no tax.
Okay, sorry that was too much. Appreciate that, whoever stuck around. So I just want to show you, like, there's ways that the rich pay no taxes. And they have self-sustaining systems. They have the Muni Bonds, tax-free, that gives them the income. They have life insurance policies. A lot of times their parents set them up since they're very young. They borrow from life insurance policy. That policy is like universal life. It's in stocks, which goes up by itself in value because it's in stocks. And even if they borrow from it, the interest they charge on the borrowing is offset by the value of the policy going up because it's invested in stocks. So they don't have to pay it back. It's just less face value if they don't pay it back. And then they take more money out of the property. They have a house, take the equity on the house, get a mortgage loan, pay the mortgage loan with renting the property. That income is offset by property depreciation, which in a residential is 27.5 years, 100% depreciation. So at $1 million property, you're getting $36,000 tax-free income offset per year. So it's just ways that the rich pay no taxes, and it's designed that way. There's loopholes, you know. So the point of this, of reading that and telling you about that, is that you can do the same thing in the stock market, okay? For example, and there's subtle things, like a dividend stock, you know, which is giving you consistent money over time, a good stock, not any stock. I'm telling you, PM, Philip Morris, McDonald's, MCD, PEP, Pepsi. These are good stocks that have a real product and service that's been going on for decades, tried and true. That's the difference. There's cover calls. Oh, by the way, Super Microcomputer has some good news. After hours, they're going to be probably they're going to be staying on the Nasdaq, and they're going to submit their figures, their annual report by February 25th. So they're kind of out of the woods, I think. So the stock went up from 43 to 47 after hours. Let me see if I can show you. SMCI stock. Here. This is a good one. SMCI. This one's more risky because reasons. But take a look at the close. 44, just about. And then it was 47 and change in after hours because that news came out. So this one can probably go, if you look at the chart, this one can probably go back up to 100, 120. So if I was going to say for the next year, a good stock, a good choice would be SMCI, probably to go to target 100 to 120, because it's just going to gain back those numbers it had previously. It had some accounting issues, and it's apparently solved those issues. So they do a lot of artificial intelligence and other high-quality tech. So I think they're good to go. Plenty of volume. Look at this market cap. Look at this volume. That's my recommendation for today for a high-risk, high-return stock, SMCI. And then what else I want to show you? Another way the rich take advantage of stocks or get a lot of money is by cover calls. No, it's like I like IONQ. Matter of fact, you guys gave me this stock when I was in the live a few weeks ago. IONQ. Why is that important? It's a pure play quantum computers, which means they just do quantum computers. It's not like IBM has a quantum computer department. It's not like Apple or Microsoft has a quantum computer department. This is only quantum computers. So the upside potential is much greater than these other companies. And it is going up. Just take a look at the chart. Let me pull it up for you. IONQ. IONQ. $37.92 a share. It was up $2 today. Look at the 5-year chart. It actually started in 2021 at $11, and now it's $37 going up. Going up with a lot of volume. So this is one that can really double and triple because it's a small company. 19 million volume, check. 5-year chart, check. Has a cover call. And what I'm going to show you in the back here, if you guys if you always want to take a picture of this, you won't see this anywhere ever. It has a great cover call to the point where the cover call will pay for the stock investment in one day. What you do, buy 100 shares here, IONQ, let's say $38 tomorrow, Monday, actually. And you're going to write the cover call for 2 years out, 770 days. Look at the 40. Look what the 40 is paying. $17.50 by 21. You can put a limit order of half of your share price. Let's say 38, half is 19. For the limit order for 19, it'll probably take with all the volume. And we've been doing this trade with my investor, so I know it works. We're going to get back $1,900, which is half of your investment, back in cash. You can use this money to do whatever you want. And ideally, you're going to put it back into stocks, into more IONQ or in more other stocks, dividend stocks, for example. So you're not only getting a 50% return in 2 years, but you can use that return to make another investment, which will get you more return, which is exponential growth. And again, the magic of this trade is that since it pays half, which is 50% of the cost, it basically pays for itself, which is like a free trade. On a margin account, it basically pays for itself. Your buying power does not go down. Your buying power could be 10K. Buy 100 shares of IONQ, minus 3K, minus 4K. But then you sell the cover call 2 years out. This is a January 2027 option chain. Take a picture. The strike 40 is you can sell your shares higher for 40 and expect to get around $19 right between the bid and ask. Put them in order. And that $19, which is half, 50%, is going to pay for your shares halfway. And then your buying power will not be affected. So it's a free trade because the margin gives you double buying power. So if you deposit 19K, the 1900 in your account, that gives you buying power for 3,800 in stock, which is going to pay for the trade. So it's basically like a free trade. So take a picture. IONQ. It's a high risk, high reward company. We are getting towards the end. I'm going to show you, if you guys want to take some pictures. Tesla doing great, up 19 today, 389. You guys, Tesla has an all-time high of 414. If it can break 414, all-time high, it's going to go to 500. So keep an eye on Tesla. It's doing great. And we know it's doing great because of the Trump administration. Elon has it like that. Here's SMCI doing great, up 279 today. Take a picture. High risk, high reward. Another one, Rocket Lab. This one, don't just buy these stocks. I want you to do your own homework. Use ChatGPT, do some research. But this one is great because it has also a great cover call. Rocket Lab. Doesn't have a PE though, so it's losing money on that side. I want to warn you. Palantir's doing great. Just shooting up, all-time high, up 447 today to 76.84. I'll give you guys golden nuggets. These stocks are doing crazy, and it's like a Santa Claus rally happening anyways. And then this one, here's the IONQ, up $2, $37.97. So probably Monday be 38. Take a look. You guys, I appreciate you. Thank you for your questions. If you want to sub, it's only $5 a month. I can teach you all these trades. You subs, you know I take care of you. If you want to throw me a couple of coins because you like the live, I appreciate you. By the way, Bob the Gambler, I appreciate the coins. Thank you so much, sir. If you want to DM me, I can take your questions. I will answer you. And also for the subs, I answer all the subs first. Appreciate you. I'll be back on Monday night to follow the stock market and to answer all your questions. And if we can do these trades right, guys, if we can get the money on dividends, on cover calls, on share growth stocks, we can pay all our bills. And what? Retire into the stock market. Yin Jerry bought NVIDIA puts 135 expiration 12/12 for $100. Good luck on that. Thank you guys again. Good night. God look up. The person who subbed, appreciate you. I'll send you a DM.